Hey everyone, welcome back to Corporate Decoder. In this video, we will be diving deep into L.I.N.K.B.A.N.C.O.R.P Incorporated's latest 10Q filing. And let me tell you, this one's got some interesting moves, especially when it comes to their balance sheet after a significant sale. So get ready because we're about to decode what these numbers really mean. And hey, if you are all about getting the raw truth from financial documents like this one, make sure you are subscribed. We also just launched our Discord community. It is linked right down below, so come join the conversation. Alright, let's jump right into the heart of it. Looking at their balance sheet, L.I.N.K.B.A.N.C.O.R.P saw a pretty significant jump in total assets, going from about $2.88 billion at the end of 2024 to over $3.12 billion by the 30th of September 2025. That is an increase of over 8%. Where did this growth come from? Well, a big chunk of it is in their loans. Net loans receivable shot up by a massive $202.3 million. That means they lent out a lot more money, which typically means more potential profit, but also more risk. On top of that, their investment securities available for sale also saw a big boost of over $122 million. It looks like they've been busy expanding their investment portfolio, but here is where it gets really interesting. They had assets held for sale that were worth about $94 million at the end of 2024, and that number is now zero. This points to a major sale, and the notes confirm it. Yes, on the 31st of March 2025, the company completed the sale of their New Jersey operations to American Heritage Federal Credit Union. This wasn't just a small branch sale. They moved over $105 million in loans and $87 million in deposits. And the big news here, this sale brought in an after tax gain of about $8.7 million. That is a pretty sweet deal and a significant positive impact on their income statement, which we'll see later. It definitely helped them shed some assets and likely clean up their balance sheet from less profitable areas. Going back to their securities, the available for sale ones saw a pretty big jump from $145.6 million at the end of 2024 to $267.9 million by September 2025. This increase is a combination of new purchases over $134 million and a bit of a boost from market changes. This shows they are actively investing in securities, looking for returns. Now, let's talk about the risks. Their allowance for credit losses on loans actually decreased slightly from $26.4 million at the end of 2024 to $25.3 million by September 2025. This might sound good. A lower allowance means they expect fewer losses. However, during the same period, they had a significant charge off of $2 million related to the sale of a loan that was identified as having credit issues, a so-called purchase credit deteriorated loan. So while the overall allowance went down, it was partly due to getting rid of a problematic asset after it became clear it was a loss. It is a bit of a mixed signal here. And speaking of problems, their non-performing loans, those that are either not generating interest or are way past due, increased from $17.2 million at the end of 2024 to $24.6 million by September 2025. That is nearly a 43% increase. A big chunk of this increase came from one single commercial loan. It seems like they've had some trouble with a few bigger commercial borrowers. This is definitely something to watch. This increase in potential loan problems is reflected in their provision for credit losses. For the first 9 months of 2025, the provision was $1.6 million, a huge jump from just $125,000 in the same period of 2024. This means they are setting aside a lot more money to cover potential losses, which is wise, but it also eats into their profits. Looking at the loan breakdown, almost every category saw growth, which aligns with their overall asset increase. Commercial real estate loans really stand out, growing by over $172 million. Specifically, non-owner occupied commercial real estate loans saw a massive 16.3% jump. This makes sense given their strategy of focusing on small and mid-sized businesses. On the funding side, their deposits grew nicely by about $307 million, reaching $2.67 billion. The interesting part here is the shift within deposit types. Demand deposits, particularly interest-bearing ones, grew significantly, while brokered deposits, which are often more expensive, actually decreased. This suggests they are attracting more stable, potentially lower cost funding. Their borrowings have stayed pretty stable with $40 million in long-term FHLB advances. They did pay down some short-term borrowings, which is generally a good sign of financial health. Now for the bottom line net income, for the first 9 months of 2025, they reported $30.6 million in net income. That is a big leap from $18.6 million in the same period of 2024. A good part of this jump comes from that non-interest income we talked about, driven by that New Jersey branch sale. Net income per diluted share also saw a nice increase, going from 50 cents to 82 cents. That's a good sign for shareholders. The earnings per share figures paint a positive picture for the 9-month period. Diluted earnings per share for the first 9 months of 2025 was $0.82, a solid increase from $0.50 in 2024. This is what investors love to see. Now, looking at all these numbers, what is the story here? L.I.N.K.B.A.N.C.O.R.P Incorporated seems to be navigating a period of significant change and growth. The sale of their New Jersey operations was a strategic move that boosted their income and likely cleaned up their balance sheet. They are actively expanding their loan portfolio, especially in commercial real estate, which is a core part of their business. This expansion comes with increased risk as seen in the rise of non-performing loans and the higher provision for credit losses. However, their deposit growth is strong, suggesting customers trust them with their money. The overall increase in net income and earnings per share is definitely a positive sign, showcasing their ability to generate profit, even with adding more to their reserve for potential loan losses. Their direction seems to be focused on organic growth in their core banking business and strategic pruning, like the New Jersey sale, to optimize their portfolio. The risks are there, particularly concerning the commercial real estate market and the rise in non-performing loans. But their proactive approach to setting aside more for potential losses is a good sign. Overall, L.I.N.K.B.A.N.C.O.R.P appears to be moving in a positive direction, balancing growth with prudent risk management. They're definitely a company to keep an eye on as they continue to expand and manage their loan portfolio. Alright, that is our breakdown of L.I.N.K.B.A.N.C.O.R.P Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.